Something shifted, not on social media, not in a trading chat, not in a speculative frenzy. And at the highest level of government and finance, that's where it is. The United States is now building a strategic Bitcoin reserve. Real estate transactions are closing in Bitcoin. Institutions are no longer whispering about digital assets. They are allocating to them. And if you still think this is just another crypto cycle, you might be missing what is actually happening. Welcome to Markets and Leaders. I'm Lyndsay Malchuk. This is where we cut through narratives and talk about the structural moves shaping capital markets. And today we are unpacking the two biggest crypto headlines unfolding right now and what they mean for investors, institutions, and global competitiveness. And I could not have a better guest to break this all down with me. He has been building in digital assets long before it was even fashionable. He understands capital markets, regulation, and institutional infrastructure at a level very few executives do. He is strategic, measured, and never reactionary. He is the CEO of Fineqia. Bundeep Singh Rangar is with me today on the show. Bundeep, welcome to Markets and Leaders. This is the first of many, I'm sure, and I'm so excited to have you here with us.
Hey, Lyndsay, delighted to be here too, and always a pleasure to have this interaction with you. So glad we can kick this one off too.
Well, based off what I mentioned above, let's actually start there. Mm-hmm. So when you look at the United States establishing a strategic Bitcoin reserve, do you see that as symbolic or do you see it as structural?
It's a bit of both. So on the symbolic side, obviously it shows sort of legitimization, acceptance of Bitcoin as a long-term asset that's held by a sovereign. But it also is lacking some of the, bigger signals that would have, I think to some extent were priced in, and to some extent what the market and certainly the crypto enthusiasts wanted. And the big difference is the following. What the US is saying is that they will retain Bitcoin and other crypto assets as part of a strategic reserve, especially those that come from like seized assets. Okay. So they won't sell and flog them. And if you recall, about 2 years ago, Germany sold about $1.7 billion worth of Bitcoin, which subsequently doubles. So they probably left like $1.5 billion on the table. And that mistake is not what the US is looking to make. Having said that, the part that's missing, the shortcoming, is that they're not actually buying Bitcoin from their sort of balance sheet, from effectively taxpayer money, at accumulating Bitcoin like some other countries are doing, such as El Salvador or even the Kingdom of Bhutan. So there is a mixed signal here. It's, in one hand, it's a positive sign that they're accumulating it and keeping it, but on the other hand, it's coming only from one source, which is seized assets. There's not public market buying.
So what does it signal to global markets when a government moves from regulating an asset class to actually holding it then?
Well, it means a lot of things, right? So now it becomes a bit more political, because when governments change and then they take different perspectives on it, there's different viewpoints. It's now an auditable asset class for public interest. And it does send a signal out there that if the world's biggest economy is holding on to Bitcoin and other crypto assets, then it is something that is, a bit more reversible, and other countries are likely to emulate it. That, coupled with the fact that, the introduction of various legislations in the U.S., from the Genius Act, the Clarity Act, the Market Structure Bill, all those are pointing towards greater acceptance, not only as an asset class to hold, but as infrastructure layer changes within the financial system. And to me, that's the bigger message here.
Okay, so is that about economic competitiveness, or is that about something deeper, like, I don't know, long-term monetary strategy then?
Great question. So I think it's, you have to sort of parse out which crypto assets we're talking about.
Right.
So, there's often this interchangeable use between Bitcoin, altcoins, and stablecoins. And I think that's a differentiation that needs to be kind of delved into a bit deeper. So Bitcoin is, for any people, the digital gold. It's a scarce digital asset. There's limitation on what the total number will be. That's 21 million Bitcoin. And there's certain economics around mining that then support it and keep it going. And there's, various theories about cycles of Bitcoin. There's a 4-year cycle that people look at based on the halving, and there's a super cycle that people anticipate. So there is that aspect of Bitcoin, which is a stored value product, if you may. Altcoins are where some of the more action lies. That's the layers, sort of the newer coins that came on after Bitcoin that are building various real world applications there. So whether it's vouchers, whether it's payment systems, whether it's um, media entertainment style infrastructure, that's all happening at the kind of layer 2 and the altcoin level. And then there's stable coins, which really are digital representations of a fiat currency. And I think what is happening with the US taking a very positive view towards crypto is they're also inadvertently making the US dollar much more of a cemented global reserve currency and a global transactional currency.
You really? Because in other aspects, we're seeing that the fiat of specific, we're going to say specific the U.S. currency, it's weakening. So you're saying that this actually could cement it into a more stable and stronger way?
I'm saying that it strengthens the position of the US dollar in the world economy.
Okay.
Because as more and more transactions take place utilizing stable coins, the dollar denominated stable coins are the ones that are leading. Like, despite attempts by Europe to its MiCA legislation and Hong Kong with licensed stablecoins, the reality is that 98% of all stablecoins on the planet are US dollar denominated,
Right. Okay.
compared with about 60% of world trade that is US dollar denominated. So while there's attempts to have the Chinese currency or the Japanese or, of course, the euro, and in some instances, of course, with sanctions, the ruble for transactions worldwide and global trade, when it comes to blockchain-related transactions, stable coins are the obviously currency of choice because they're stable and you don't have price volatility. But the US dollar denominated ones are the ones that are leading. Like the European denominated ones are still like 0.5% of world trade. So you think about the implications of that as we get more digital and as we become more on chain for what we do. Well, the US dollar is going to be the denomination for trade. The second aspect of it is, if I just delve into like how stable coins work for a second, right? So stable coins, as we know, are stable because they're price stable, right? They're not like Bitcoin that are volatile, and they're stable to a particular fiat currency. So in this case, we're looking at the US dollar, and there's a peg that keeps one digital or stable coin equal or equivalent to one US dollar.
Okay.
So if I look at the biggest player in the market, that's Tether, which has like about going to about $190 billion worth of stablecoin issuance, followed by Circle. Tether today is the top 10 holder of US Treasuries
Wow.
and now becoming one of the top 10 holders of gold. They're buying both in enormous amounts every single week.
Wow.
Tether 2 years ago made as much money as Goldman Sachs. They made $87 million of profit per person in 2024. The most profitable company on the planet per person. Now, why is that so? Their model is very simple. So Lyndsay, when they started like 10 years ago, they would say, okay, because there was no digital dollar, right? If I wanted to sell something on the blockchain, I couldn't receive money for it in a currency that was not going to be volatile, right? So if I was going to sell, I don't know, a pair of, a car, let's say,
Okay.
a car for like $10,000. If you price that in Bitcoin and you said, okay, I want to sell it at 40, let's say Bitcoin was worth $10,000 back then. By the time you sold the car, that price could have gone up or down 5 or 10% in real world terms. So you couldn't price an asset in Bitcoin for that reason. You needed a stable currency to basically sell things on the blockchain, even if they were physical things, but you were pricing them and transmitting them on the blockchain. So Tether's model was very simple. Lyndsay, you give me like 10,000 USD, and I will give you in return 10,000 USDT. And the Circle does the same and says, here's 10,000 USDC. Now, the reason that that 10,000 USDT has value is because they've taken 10,000 USD from you and they keep that as a reserve. And, certain stablecoin reserves are very public. You can see exactly what they have. Not only are they audited, they're also on chain. So you can actually go and see them yourself and say this X amount that's held in cash, X amount held in gold or other assets. But in effect, Tether was guaranteeing the value of your USDT because there was a collateral of USDT underpinning it that you provided them. Simple model. What happened over time, of course, is that they started accumulating a lot of this, which is now close to about 190 billion.
Hmm.
Now, cash is a poor reserve when it comes to returns, right? Because it's
Yeah.
safe, but it obviously loses value from inflation every year, and it's not making any yield. So Tether started deploying about 70 to 75% of that reserve into US Treasuries. Why? Because the counterparty risk of a US Treasury bill and the US dollar is exactly the same. It's the US government. The
Oh.
difference is that a Treasury will give you yield. So in a high interest environment, if you get 5% yield on 100 billion, that's 5 billion of pure profit, pure income
Hmm.
for almost no risk. Right? The risk is the US government. So if the US government's in trouble, we have a bigger issue at hand. So that model means that Tether is buying US T-bills. It's buying US government debt. And that's why it's one of the top holders right now. It's greater than, for example, Germany. So what the US is very cleverly doing, it's creating demand for its debt
Okay.
and allowing
Wow.
for that debt to be purchased by non-state actors. Because prior to that, the biggest holder of the biggest buyer on an ongoing basis of US debt was China. That has geopolitical implications. Well, with
Major, major
right?
geopolitical.
I'm sorry.
Yes.
Yes,
We see it like more and more every day. Yes.
exactly. And in that environment, and if you look at some very important shifts in the world economy, it's driven by debt, right? You look at
Mm.
South America, Argentina, Brazil. It's a debt-driven um, implication, and the Rothschild family, for example, is famous for basically understanding the value and the power of debt. So if you surrender your debt to another country, you're actually surrendering a lot of your sovereignty, and that's a national security issue. So by giving non-state actors that power, you're actually removing power away from potential political rivals. And Tether, for what it's worth, is struggling a bit more to get in the U.S. market. They seem to be as sort of less regulated, less transparent about the reserves compared with, for example, Circle. So what is happening is that the U.S. has found a very clever way for it to offload its debt and do it in a less risky way from a geopolitical perspective. So that's what's happening at one level
Yeah.
for stablecoins. The second thing, of course, is that stablecoins are replacing many of the other ways of transmitting money. So whether it's money, you look at the remittance market, probably $1 in $3 right now that's transmitted is in a stablecoin.
Amazing.
So it's, and of course now there's banking and there's various things that we can sort of deep dive into as to how that's affecting uh, the rails of the banking system and international finance, aside from like cross-border. And then there's also funky stuff like
Right.
gambling casino payouts, which are also largely in stablecoins.
Largely. But do you think with all of that, that other nations now feel pressure to respond the same way or greater?
They do, but you know what is unfortunate, I suppose, is that rather than looking at this as an opportunity for promoting their own fiat currency, they are creating more of a restricted environment. So you look at Europe, there's restrictions on the total number of transactions an exchange can hold in a non-euro denominated stablecoin, ceilings for volume and value. And there's a top-down effort to promote a euro-denominated stablecoin. In Hong Kong, yeah, in Hong Kong, where I was just last week at a consensus conference, there is a more of a liberal approach towards crypto, and Japan and Hong Kong both have been pretty progressive there,
Hmm.
but with limitations, right? So it's a licensed activity, and the licenses are given to larger institutional players. Like Standard Chartered, for example, has a license for stablecoins. And the trick with these new technologies and adoption of new technologies is to allow bottoms up innovation. And if
Okay.
you try and engineer a top down approach for promoting a new technology and a new paradigm, it generally is destined not to really work well. And
Hmm.
we've seen that time and again. So you have to allow for like grassroots level increase and allow for, yes, the guardrails to be there, but allow for adoption by the institutions, not quashing by the institutions. And that's the big difference.
And that's the thing. Like when governments adopt Bitcoin, I think the question is, does that reduce perceived risk or introduce more or new political risk?
I mean, it depends from which perspective you look at it, right? If you look at it from the IMF's perspective, yes, they'll see as more risk, right? Because
Right.
the IMF, tied to the World Bank, is to some degree threatened by crypto.
Of
They're getting
course.
much more, um, let's say, amenable to stablecoins because that's seen as a parallel infrastructure and it is still dollar denominated and it's not as speculative per se compared to the other coins. So there's a growing tacit acceptance of stablecoins. But Bitcoin is not a stablecoin. So when a country holds Bitcoin, that seems to be more speculative. Um, while there are, some measures to try and look at it as a reserve asset, they're still largely against it. Now you contrast that with certain, I'd say, more pioneering green shoots of adoption. So in the US, for example, there's directives to look at a family's asset base when they're applying for a mortgage to include their Bitcoin holdings. And if
Right.
the structural bill goes through, then there'll be a few more coins that are accepted at that level. And that it doesn't mean that they give you mortgages backed by a Bitcoin, but they're calculating your gross wealth by including crypto assets, unlike before. So it's not just your property or your car or your gold or your stocks, but here's a crypto asset. You look at certain jurisdictions like Bermuda and Barbados, they are now allowing for insurance companies to hold Bitcoin as a reserve for both regulatory capital and solvency capital. That doesn't mean it's one-to-one, that you have to over-collateralize it, but it does allow for large Bitcoin holders to now find a way of monetizing it, but also utilizing it in a way that's part and parcel of the larger financial system, in this case, the insurance world. So if you're holding Bitcoin, yeah, you might have to put 1.5x or 2x of what the actual cash requirement is, but now you don't have to sell your Bitcoin. You can hold it, and that counts as liquid capital for
That's the
you.
thing.
And that's a
But
game changer, right?
I mean, from there, I mean, you made some really good points, and we're gonna pivot here,
Okay.
and we're gonna actually go over to real estate. And you mentioned something about the mortgages right there, and so we'll get into that. But to start off, I mean, we are seeing more property transactions completed in Bitcoin across North America. It's not just overseas or in the Asian countries anymore. So,
Yeah.
Bundeep, from your perspective, is this still a novelty, you think, or are we actually watching early stage infrastructure finally being built out here?
So there again, yes, there was Christie's had a sale recently for $14 million commercial real estate, in crypto. That was exciting. That was new. That
Crypto.
was, yeah. There's companies that I know are tokenizing real estate and offering that to a global market. So Propi in San Francisco, Citadel out of Singapore, they're tokenizing real estate in North America or in London. And now there's parties doing this in Dubai as well, where if you wanted to get exposure to Dubai real estate, you don't have to spend $500,000 or $1 million to buy an apartment. You could buy a token representing a set of property assets, let's say 10 apartments, and you can buy $1,000 worth of it, or $10,000 worth of it, or $50,000 worth of it, whatever you can afford. And you get the benefit of the property value increase because that drives the token price up over time. It
Right.
basically mirrors that. And along the way, if that property asset is generating yield in the form of rental income, well, your token gets the yield. So you get the equivalent of a dividend kind of payout on your token.
Is
So
that a little bit like a REIT?
a REIT is somewhat similar, but REIT's publicly traded on a stock market within geographic restrictions and 5 days a week, 9:30 to 4:30. And there's not a secondary market for it. Whereas with a token, if I own this token that gives me exposure to property in Sydney, for example, and I wanted to pull out, I could sell it to anybody across the world who wants that exposure. I'm not limited to a REIT subscriber in that local stock market's jurisdiction. And there's immediate settlement. There's a lot, and it's one of the myths about crypto is that it's used for nefarious activities. I'm not saying it's not true. It's true, of course. But so is cash. It doesn't make the U.S.
So is
dollar
cat.
bad.
Yeah. So
But
is
the
anything.
right. But the myth is that you can't track and trace it. Well, crypto is more trackable and traceable than anything else because it's all on the
Right.
blockchain. It's all visible. You can follow the wallet addresses and follow the flow of funds. So the ability for you to sell your tokens to known counterparties and immediately settle in a much more cost-effective way is much greater and much more traceable and immutable on the blockchain than it is using traditional REIT or stock market infrastructures.
Okay. So for a lot of our audience, this is so brand new, so green for them to try and grasp the concept of real estate and Bitcoin. So maybe you can completely simplify it here with
Yeah.
what has to exist behind the scenes for someone to buy a home using Bitcoin and for that to actually feel as seamless as the traditional way.
Fascinating question because of where things are going. So let me just sort of peel that and feel the different layers away, right? So um, at its essence, tokenization, which is what is one of the big trends in the crypto world right now, is to create fractional ownership of assets. So if you think about a company, how does a company create a fractional ownership of assets? It creates a class of shares. And those shares are traded. You can buy $200 worth of Microsoft stock by buying that stock. So now you're a part owner in Microsoft. To get to that, you need to go through this elaborate system of broker dealers who then onboard you. They check who you are. They check the source of funds, et cetera, et cetera. And the trade for that stock happens on a stock exchange, which is basically a market, right? That's what the
Right.
stock market. And you can sell to other interested buyers, either through a gross trade or peer-to-peer, whichever way it works. And you're selling it during restricted hours, i.e. 9:30 to 4:30, in whichever time zone you're in. Now, tokenization takes that further because it embeds the attributes of that asset in the token itself and makes it actionable. So first of all, the token can be of any denomination you want. You could make it worth $10. So you lower the access point. You're democratizing financial assets and the access to it. If you took private equity funds, normally you have to put in like a minimum check of $250. Well, if I tokenize it, I may decide to make it $25. And you might get, 100 people or 1,000 people buying it because now all of a sudden they can afford it.
Right.
If I am going to tokenize US dollars, which is effectively what a stablecoin does, now if I'm sitting in the Philippines or Zimbabwe or, Nicaragua or other places in the world where there may be inflationary pressures, rather than holding US dollars, I can hold a tokenized US Treasury. And therefore, I'm getting the same thing like a US dollar, but I'm also getting the yield. So it creates a lot more access, that tokenization function, right? You're basically creating this fractional ownership of an asset. Now, whether that asset's a US dollar or a piece of property or a plane is entirely up to you. Going back to property, since that's the question you asked, I guess the elegance of tokenization is that it allows for you to access property markets in geographically disparate regions without having to be there at a much lower price point, much more entry point. If you wanted to deploy $1 million, sure, you could do it. You could get a diversified portfolio, but you don't have to buy an apartment for $1 million. You could get a portfolio from that. Now, within that are embedded certain things via what are called smart contracts. So smart contracts are not contracts in the legal sense of the word. They're basically like if-then statements, in lines of code. So if there's rental income, then pay out the token holder their share of that rental income in the form of a stablecoin. So it happens automatically. You just accumulate, you get this like payout on your token in your wallet, and you can choose the currency. You get it in Bitcoin or the stablecoin or the native coin that it might have. Then if you want to sell it, you can put them on exchanges, whether they're centralized or decentralized exchanges, where you put them up for sale and you can sell them to some other token owner. You don't need to know who that owner is. The exchange is already putting that in place for you. And at the basis of crypto transactions or blockchain is this whole notion of trustless. You don't need to know the other party. The system itself is building that trust. And you can say for your token, you can put features there that, I'm willing to sell it for this price. Once the price goes here, there's a buyer, and it can trade and settle and be done instantly on the blockchain via various swap pools and exchange rules that are there. And it's embedded in the actual architecture through smart contracts.
So would that not then eliminate real estate agents?
It could, although they might just use this as a tool rather than
Fair enough.
replacing. Where I think they are probably more threatened, and where this is going, and that's a big. So prior to the consensus conference that I was in Hong Kong for last week, I was at this other more exclusive conference in Dubai called the Satoshi Roundtable. It's sort of an invitation only, and it's been running now for like about 15 years. And the Satoshi Roundtable normally is very crypto-oriented, which it was, of course, this year as well, as the name suggests. But one of the big themes this year was AI. And within AI, agentic AI, right? So if you think what's going to happen down the line is your ability to access your portfolio is going to be AI-driven. You won't have to go through all this fairly
Whoa.
tedious process
Hold
of
on. Repeat that. Your ability to access your portfolio will be
you
AI driven.
you'll be talking to your AI assistant,
Is
right?
it trustworthy?
There's so much being built right now that is trustworthy that, you will, if you, I mean, I'm going to date myself here, but there was a time when people didn't want to store data on the cloud. They wanted to keep data on their drives, on their
That's true.
computers. They were like this whole thing about why would I keep them in some unknown network out there?
Yeah, I
Now we
can't
don't
see
think
it.
twice. It's all our stuff's on the cloud, right? There was a time when people feared putting credit card details on a website. It's like, I'm not sure we're giving it to you, if you recall. That wasn't like that
Hold
long
up.
ago.
I'm still nervous. So if it goes through PayPal, I feel like it's a little bit better because there's like an extra layer. But if it's like straight CC transaction, I'm still a little bit like, I don't know about this.
No, and as you should. So, some brands have become the trust repositories for you, right? So PayPal is one, WorldPay
Yeah.
may be another, MoonPay may be another one. And what's going to happen is they will have the agentic AIs, right? You'll be talking to PayPal's agent. And what'll happen is that you will have your own agent, like you see that increased use of AI in your email servers, for example, your email systems, where they're already parsing out data for you and giving you sort of intelligent things. And of course,
Yeah.
all of us now use some form of an AI chat, whether it's ChatGPT or Claude or whichever one. There's a whole bunch of ones out there that are becoming our best friends.
Yeah.
They will be the conduit for you to go and have transactions done. You'll start saying, okay, can you go and, if Bitcoin goes to this price, can you buy it for me and put it in my wallet? And that will look out for it and it'll just execute for you. And at some point, there'll be like agent to agent discussions that you just have to give your parameters and leave it to it and say, look, if it gets to this price, I want to buy more. If it's less, I want to sell. I want to get a diversified portfolio that gives me this risk reward profile. I want X percent of like stable coins, X percent of Bitcoin, X percent of other coins, and or, whatever else you want to buy, gold, because that's obviously huge. And then again, gold is another one that's being tokenized. You can buy
Oh my
tokenized gold.
gosh,
You don't need
yes.
to own physical gold.
Yeah.
And then tokenized gold is convertible into Bitcoin or a stable coin on the fly. So it's not that far away that you'll be doing this through agentic AI, sort of agent-led AI, and you'll be talking to your best friend that's out there virtually, that over time you will grow to trust more and more, because you'll start with small things like, help me find that email. Then you might say, look, help me find my best insurance coverage, and it'll go and check out different, offers from different insurance brokers. And then it's only a matter of time where you say, okay, can you just go buy it for me? Then it'll have access to your, credit card or bank account, whichever one.
Wild.
Now that'll happen, even if you don't think it will. Now it might be guarded. You might have like a wallet where you keep certain cash, or you might have
Yeah.
only one credit card that has a limit for your entire bank account access.
Yeah.
And that might also then be the choice for you to have a crypto repository where that becomes your transaction currency. So you might have a stable coin and pay with that. And then the agents will just talk to other agents, because I'm sure the insurance companies will have their own agents, and the airlines will have their own agents. So that agentic AI is where the world's going. And that has both huge efficiency and utilitarian utility value, but
Yeah.
it also has conversely some as the sort of negative
A
or
threat.
threat. I'd say they're dystopian views on that as well that could come to bear. So that's why you see a fair amount of controversy in the industry. But regardless of of the controversy, the one thing that's for sure is that it's going to get more and more adopted in things we do. It's, we
Okay, so then what about mortgage applications? Do you believe crypto holdings will soon be treated more commonly as legitimate collateral in those mortgage applications?
I mean, they're beginning to look at crypto assets as being part of your net worth and balance sheet. But with that also, which ones, right? So stablecoins are easy because it's the equivalent of cash, right? So that especially recognized stablecoins. And I guess as a disclaimer, I should say I also co-founded a stablecoin company called STBL with one of the original
There it
co-founders,
is.
Tether.
Shameless
Uh,
plug.
so, so that's and so I understand this market reasonably well. Stable coins will be the ones that are the easiest for financial institutions to accept because they are underpinned by
Right.
a US dollar. Bitcoin is probably the next one, and that's the one that gets more and more acceptance because it ultimately is a store of value.
Mm-hmm.
The market structure bill is looking at a few other ones to be accepted in that category. So there's a question of both which ones get more legitimized and are seen to be less speculative, and then which ones are treated as securities versus commodities. Because the efficiency of Bitcoin right now is that the CFTC ruled that Bitcoin is a commodity. So it doesn't have to go through securities law. If you buy Bitcoin, I don't necessarily need to check your passport. But if I
Wow.
sell you an altcoin, which is yield bearing, that's a yield bearing instrument. So Ethereum or Solana or Cardano or some other ones are still not in the pure commodities bracket. Now that might change, and that makes it more acceptable and more utilizable. Otherwise, you can still use a security token, but then you have to also do that with your photo ID and ID check, which creates a little friction.
So you see perspectives from all over the world, all over the globe, not just in one specific country, everywhere. We're going to flip to just Canada specifically here. So give us your perspective here, how you feel we are moving. Are we moving fast enough in policy to stay competitive globally? Are we way behind? Like, where are we sitting here in Canada specifically?
It's a nice contrast to be sitting in Dubai versus Canada because Dubai, like people where I'm living right now, there's people who will buy property using Bitcoin and using crypto. It's not even it's not even a question. It's just done. You just have to look for wallet addresses. People will send a test transaction before you're buying a property and stablecoin of Bitcoin. Canada had a really good early lead. Like they were one of the first countries on the planet to approve exchange traded funds backed by crypto. Initially Bitcoin and soon after that Ethereum. Unfortunately, that's where it stalled for the longest time.
Yeah.
And I think that whether it was, pressure from Big Brother down, just below the border, or whether it was just change in the mindset, I will never know. But it did lose that lead. And the reason I contrast that with the UAE, which is a much smaller country, is that they've gone the other way. Like this is a place where there's, very clear regulations, a lot of encouragement, and there's not a fear factor to the extent that I think has set in Canada. So Canada's looking to, even unlike the US, where they're now bringing in, at the very minimum, stable coins into the banking rails and making it part of the banking system, and they will use them. You'll see more and more banks issue stable coins and accept stable coins. The fear that banks have is that, will people start putting their money in stable coins rather than deposits because they can get interest of that? That's the big current fight in the Clarity Bill. And you saw the head of Coinbase sort of back out of some of his earlier support for um, the bill that's being discussed for this purpose. But the genius one, but Canada hasn't got to that point. Canada's just still trying to put guardrails, and they're focusing on things like custody, which is important, but that's not the story. Like that's infrastructure. So I think Canada could do a lot more to, if anything, we talked about tokenization earlier. If Canada's looking to finance large scale projects that are going to make it maybe less dependent on the US economy and maybe more international, like funding pipelines and funding oil refineries, do it as a tokenization project.
Even gold mining, do it as a tokenization.
Absolutely. So I think it needs a bit more of an enlightened approach. I've had conversations with different government levels in Canada, in Ontario as well. And while they get it, I just see it's just not moving at the pace that I think needs to move. There's just too much inertia. And I think that's unfortunately not serving Canada well.
What about institutional players then? There are some that are still hesitant. So, what is the biggest misunderstanding that they still have about entering crypto today?
In Canada or worldwide?
I'm going to say let's stick to in Canada right now.
Yeah. So, I'm probably not the best person to answer that because I have a really biased view against the Canadian financial system.
Fair enough.
I mean, Canada has like 6 banks that own everything. Like, if you think of the banking system, it's owned by them. If you think of the stockbrokers, well, it's, TD and RBC and Scotia that own the majority of Scotia Trade and whatever else. You look at the stock exchange, guess who owns the stock exchange? It's the Canadian banks again. So they have too much of a reason to
Hold.
keep a hold on. It's a bit of an oligopoly, and there's not going to be a huge amount of innovation that's going to come from the outside because they'll just be thwarted. So institutional adoption in Canada is basically this club that has to adopt it. And therefore, when it's a club, if one moves, the other will be like treating that person as a pariah, unless they all move. And trying to get all to move in this direction will only happen when they're forced to. And that, unfortunately, is where Canada is. It's just not encouraging innovation, acceptance. And I think that is going to hurt us in the long term.
Well, I mean, Canada, time to step it up. We've learned the hard way many times. It's time for us to just look within and really step that up. Now, Bundeep, let's actually zoom out.
Just to give you one contrast, so like a lot of
Yeah.
Canadians are actually quite active in the crypto space. Like I meet a lot of them in
They
Dubai.
are.
Like, for what it's worth, CZ from Binance is Canadian. Some guys who are doing the FDUSD project that I mentioned, the Standard Chartered one out of Hong Kong. The stablecoin is a Canadian. There's obviously some of the Vitalik, who was one of the authors of co-founders of Ethereum. Also is Canada, not to mention, of course, Elon Musk. Like, there's a whole bunch of people who've either come from Canada or passed through and decided not to be there. And that, to me, is a loss of brain talent that really should be to Canada's benefit. And
Absolutely.
yeah, so anyways, I'll stop there.
Yeah. So, okay. So let's zoom out. We digress.
Yeah.
Let's zoom out 5 years here. What does adoption actually look like in daily life?
You will not see a lot of difference between the crypto world and the traditional finance world. I think that integration between the two is happening at levels that we're not, are unprecedented despite the market downturn. So, the ETF wave was one part of it, like one early signal of that happening. The stablecoin adoption within banking transmission for immediate settlement as a payment rail, as a new kind of on-chain currency that makes things faster. You look at Ripple's price; they're an interbanking protocol for settlement, and they have stablecoins for that. So, to me, like, you will be using a credit card, and you might be paying that bill or that specific item you're buying from your fiat currency account, or it might be coming from your Bitcoin or a stablecoin account. It'll just become fairly ubiquitous. I also think that there'll be new things that are tokenized that we have not imagined so far. So whether it's royalty streams from music or artists, with their products, there's creative economy aspects. I think that'll come out in tokenization, and people will be buying things they couldn't buy before. They would buy their artist libraries or a small slice of it.
Totally.
I also think, like you talked about before, property. I've seen some innovative companies that will basically refinance your property, take out some of it's like a reverse mortgage, if you may, in the UK. And Canada, I think, has a similar thing that they call it, where it's an equity release on your property. So if you today have, for example, 60% of your property on mortgage and 40% is paid out, they would refinance it, maybe say it's 70% of the property value, and give you 10% extra in your pocket, but they'll put that in Bitcoin. So you'll be paying, for example, the same amount that you were paying before, but you'll pay for a longer period of time. So your actual payout per month doesn't change. If you had 12 years left on your mortgage, you might now have, 15 years or 16 years. So you'll pay for longer. But the meanwhile, you've released 5 or 10% of the value of your property that goes into Bitcoin. Now, in that
That's a
next
good.
10-year period, if Bitcoin's price goes where people expect it to go, and it goes up significantly, well, it'll pay for your property easily, so you can cash out there, and you will share the upside with the financier. And the longer you hold it, the less you have to share. So you're incented to hold this longer term because now you're getting a diversified exposure into
Right.
both the property market and this digital gold called Bitcoin.
That's smart.
So there's some smart, clever people doing things like that. I think are just you'll see them flush through, and therefore the financing. When you look at mortgage financing, you might find clever models where again they're the two worlds are not as disparate as they are today. They're a bit more
Right.
fused.
Well, there's risk involved in all of this. I mean, what is the one risk in the current environment that people just are still not paying enough attention to?
Well, again, there depends on which side of the fence you're sitting, right? So some of the people are saying this is a crypto's, kind of apocalyptic moment, and there's talk about Bitcoin going down even further, et cetera, et cetera. So I've been in this space long enough that I remember when it went from like 500 to 300, people were thinking this is the end of Bitcoin. So I don't think this is the end of it. I think it's a cyclical downturn, but it's also a reflection of this not being a speculative asset as much as
Okay.
anymore, but a cyclical asset. And
Right.
a lot of the funds that typically went into this kind of more alternative asset, if you may, have now gone into gold or silver. And so,
100%.
right, and you've seen where those prices have gone. So they've shifted there, and you also saw tech stocks take a big hit from this kind of overhang on AI spending, and therefore, when tech stocks go down, that usually has a correlation effect on crypto assets. Even though some might argue it should be uncorrelated, they're actually fairly correlated when it comes to price of movements because the same kind of person buying tech stocks that are buying crypto assets, right?
Okay.
But
You see so much on either side, the positive and the negative. What is one thing that actually genuinely excites you most right now about where this is all heading?
I think AI. I think the AI
Really?
effect, because AI, when it has to trade with each other, if you have these agentic bots that are going to talk to each other and trade and transact on your behalf,
Mm-hmm.
almost by necessity, uh, we'll be doing it through a stable coin or through a crypto coin because it's the digital native currency. Right? It's the transactional layer of the internet. That's what ultimately what the blockchain is. So to me, that's super exciting, and that's what being overlooked. Um, the fact that it's going to affect traditional services is, when Claude's Anthropic's the latest Claude 6 version came out, some of the stocks for law firms dropped like 5% because they're like, this is
Really?
going to replace. Now you kind of iterate that a few iterations down, and you have these personal assistants talking to these other agents out there. That creates a huge amount of transactional activity, and that then lends itself to more transactions on the blockchain because the blockchain was built for this value transfer seamlessly and instantly. So to me, that's what is going to be really exciting over the next few years, and we haven't really even begun to see a
Like
lot of that yet,
just
but it's coming.
yeah, like just the surface is being like lightly scratched right now. We're in very interesting times for sure.
Yeah, I'll
Okay.
get you one more little anecdotal twist here. Like I've person I know is now becoming a very good friend in Germany, and they do real estate development and real estate. They've been a traditional real estate investor. And what they're doing very cleverly is they have buildings that they own, and in the basements, they're putting Bitcoin mining servers. So when they have an investment portfolio, it's not only the real estate value, it's the Bitcoin that's being mined there. And the heat that's emitted from the servers is being channeled back in to
Wait,
heat
hold
the
up. Did
building
you and I
and
talk
therefore
about this
reduce the
recently?
cost of your
What?
utility bill.
Was it you and I that talked about this, or was because this is like this sounds so deja vu, but so innovative. Like they're taking the heat from what the building is producing. Is that what they're doing?
The Bitcoin servers, the mining servers, because as you know, servers are hugely heat emitting. That's why they
100%. Yeah.
keep them in the best, like the most important places for mining tend to be like
Right.
really cold places like Norway or, where there was this cheap electricity and low temperatures are the two drivers because that computers generate a lot of heat and that heat can be utilized to basically heat your building and lower your utility bill, which means now you're getting a higher yield and because you have obviously cost saving on the utility side and a higher sort of asset appreciation, because not only is your real estate going up in value, but over time, as Bitcoin goes up in value, you've accumulated that. So now think about a tokenized real estate offering that gives you that. That's clever. That's interesting. That's different.
Those Germans, they just think of everything.
Yeah.
Okay, Bundeep, it is time for something extremely serious and even more highly scientific than what you just mentioned. We are going to play a game. Ready?
Yeah.
The game is called Hot Take, Hard Pass, or Call Your Lawyer. I'm going to give you a statement. You must immediately respond with one of those three answers. Hot take, hard pass, call your lawyer. Then give me one sentence why. So we need humor, we need wit, we need no overthinking at all. Okay?
Okay, not it.
Okay, ready?
Yeah.
Here we go. First one. Bitcoin becomes a global reserve asset within 10 years. Is it a hot take, hard pass, or call your lawyer?
Hot take.
Hot take. Tell me why. One sentence.
It's the digital gold.
Okay. Digital gold it is. Second one. Every major bank launches a crypto division by 2030. Which one are you choosing?
Every major bank. Hot take. By 2030.
Hot take.
Yeah.
2030. Yep. Tell me why.
I've seen other asset managers and financial institutions move their crypto divisions from some peripheral location in the lawn to head office, top floor. And that'll be
top floor.
Weathers.
Top floor corner office. There we go. Okay. Next one. You will personally buy your next property in Bitcoin. Hot take, hard pass, call your lawyer.
I'd have to call my lawyer because it would be a question as to where I'm buying that property.
Touche.
Not that I don't want to, but it may not be permitted.
It was the pause there too. I was like, which one actually? Okay, ready? Central bank digital currencies outperform decentralized crypto. Hot take, hard pass, call your lawyer.
Pass. Hard pass.
Hard pass.
Because
really?
Central bank digital currencies are basically a way for governments to monitor everything you do.
Okay.
They will be able to tell you what you spend, where you spend, who you're sending your money to. That's just not going to fly with people who want their own privacy.
Yeah, that makes sense. Okay, ready for the next one?
Mm-hmm.
Meme coins make a dramatic comeback. Which one are you choosing? First of all, hold up.
Yeah.
Explain to our audience what a meme coin is.
Meme coin is kind of like a community token. It's something that is a bit of a fad, but it does have economics around. Like it's like Major League Baseball cards. That could be.
Is it like the Trump coin or the what's his way? That coin? Is it like one of those?
Yeah, I mean those are also meme coins, and to some extent, Shiba Inu, and they're also meme coins, or Dogecoin. They're also kind of in that genre. Okay. But I think that there will be utility. So.
What would you choose?
Make a comeback.
Hot take, hard pass, call my lawyer.
I would go for hot take.
Hot take.
Yeah.
Okay.
Yeah.
Can you tell me why?
Because I think a lot of the creative industry will come back. Will go into crypto with. I think fan tokens will be the new expression of meme coins.
Yeah.
Rather than just like fuzzy, trendy things for a short period. I think like sports teams and artist labels, there'll be a lot of fan coins that will become the new genre of meme coins.
Yeah, I can see that totally. Yeah. Okay, last one.
Gaming characters is another one there too.
Okay, regulation accelerates adoption instead of slowing it down. Hot take, hard pass, call my lawyer.
Unfortunately, I'd say that's still a hard pass.
Still a hard pass.
I think regulation is still struggling with this. There's not that complete openness, and while Trump has been like changing the landscape in the U.S., given questions about the second sort of midterm results and how that might change his, position in the two houses, will that impact future legislation? So other countries might just take a wait and see approach.
Okay, fair enough. Now, we haven't actually even touched on Fineqia at all. So why don't you just give our audience the Coles Notes elevator pitch, and then in 5 years, Bundeep, what's the headline going to be for Fineqia?
I I think what we're doing right now is we're not trying to do anything too trendy. So you saw this whole digital asset treasury play, which had a huge summer and then a big winter starting in October. So we don't try and do fads. We're advising a lot of companies on their tokenization strategies. That's a big thing of what we do. And we have a platform to create the equivalent of ETFs in Europe, which are ETPs, exchange traded products. We probably have the widest permissions when it comes to giving not only what we can accept as underlying crypto collateral for such ETF offerings. So it's not just Bitcoin and Ethereum. We could really take a tokenized building and create an ETF around that if that's in token form. We can also give yield back to the subscribers of that ETF from wherever that yield comes from. So it could be from mining, it could be from staking, it could be from some of their off-chain activity. So I think that infrastructure is built. We're just waiting for the right products that differentiate themselves. I'm not sure it'll be meme coins, but you never know.
Cool. Yeah. So what do you think the headline will be in 5 years for you?
I think we will be a player with very differentiated products that are meaningful for people as opposed to just trendy.
Love it. Love it. Well, this has been a sharp and very honest and incredible, insightful, and all the things conversation. So thank you for breaking this down in a way that actually cuts through all the extremes and focuses on what actually really matters and how we can understand it. So thank you so much.
Absolute pleasure. I'm glad to do this, and hopefully you'll have me on again. We'll do some more fun.
Absolutely. You're going to come back all the time now. You're going to be a regular now.
There we go.
We'll see you soon. Now, for everyone watching and listening, here is the real takeaway. Crypto is no longer a side conversation. It is entering policy rooms, and it's entering balance sheets. It's also entering real-world transactions. The question is no longer whether adoption is happening. The question is how fast and who is positioned for it. Now, before we sign off, of course, here is our Markets and Leaders disclaimer. Remember, these are the opinions of our own with possible vested interest in any or all of the companies we speak about. Always be sure to speak with a licensed financial advisor and know your own risk tolerances. This is not to be used as financial advice. For a copy of our complete disclaimer, head over to appeton.com. Thank you again, Bundeep. You have been phenomenal. Where can we actually find you for more of your insightful knowledge?
Bundeep at Gmail is my easiest way to access me. It's a simple early adopter email address. And then, of course, there's, Rangar.com, my last name will get you there. And then it's Finequia's website, Finequia.com.
Perfect. We'll definitely pop it on the screen and in the copy as well. Thank you to our audience for spending your time with us. I'm Lyndsay Malchuk. This has been the Markets and Leaders podcast. Subscribe and tune in for more episodes to come because the future of finance is not waiting politely, and neither should you. We'll see you next time.